We start off tonight with the market sell-off. The Dow falling nearly 200 points. The S&P 500 snapping an 8-day winning streak as trade turmoil and earnings fears roil investors. But the biggest loser today, small caps. The Russell 2000 getting hit the hardest, sending the group reeling back into correction, down more than 10% from its highs back in August, leading the rest of the broader market into the sell-off this fall. So are small caps the true tell on this market? Is it still safe to buy stocks? Pete, we kick it off with you.
I do think it's still safe to buy stocks. I look at this. Obviously, this is one of the many metrics. Everybody's looking at different things, and I look at this. But you know what? I'm impressed with what I saw today out of different tech. Obviously, we see the semis getting a little bit of pressure, but they've had a great run to the upside. Also, some bounces here and there. I look at volatility and I look at liquidity. Those are the things that matter most to me. And I think we're seeing volatility has come in dramatically. We see liquidity, which I think has been generally unbelievable the first quarter. At the start of April, by the way, volumes have really been very, very light. So that's something I'm keeping an eye on because I don't like what I'm seeing so far in terms of that kind of volume. We've dropped from averaging 21 million contracts a day in the options world down now to averaging about 17 million. So that's significant. So we're losing some of that volume. Not sure exactly why, but maybe it was because of the performance of the first quarter. But I don't think just because we are seeing this particular segment of the markets going down, I don't think that necessarily says the rest of the market's going down.
Well, except that they got stuck here, right? So the IWM, the ETF that tracks the Russell 2000 small cap index, is down about 8.5 from its highs. It's up about 15% from on the year, which is in line with the S&P, and it's also up in line with what the S&P is up off its lows. But it's not going anywhere. And so I think part of the question is what does it mean now that we've had this? We know that lower rates, it makes equities look more attractive, that sort of thing. But when you think about small caps and how indebted they are, or they have the highest debt to equity relative to these other caps, it could be a kind of a problem. Even though they can finance their debt cheaper, it also is reflective of the fact that we might be entering in a different economic cycle. A lot of us think that lower rates at this stage of the cycle is not particularly good, and small caps are obviously going to be most affected and in at least or more vulnerable position in economic time to kind of finance them.
Right. And in fact, take a look at this chart before we go on. The debt surge that we've seen in small caps is a percentage. The percentage of non-earners within these indices for the Russell, take a look at that. That's 35% of the index are non-earners. They don't make earnings. So, in other words, if there's a downturn, if there's any sort of a slowdown, these guys could be most vulnerable if they can't service their debt. A lot of this debt, by the way, some more color in this chart, is due in the next few years.
How are we defining small caps, by the way?
The average market capitalization is $2.4 billion on the small cap index, Russell 2000, and the median is $861 million.
This is why Melissa is running this show, because we need this kind of information. But the irony here, of course, is as you guys talk about the debt burden, rates haven't been this low in a year. And in fact, if you look at essentially where small caps have been relative to the S&P, as Dan pointed out, they're more or less keeping pace. It's just really over the last 6 weeks when people have been most concerned about growth. What did we hear this morning? The IMF downgraded global growth. We're now at 2009 levels. We haven't been this low essentially in 10 years. Italy went from 1% GDP down to 0.1. So, and if you're going to be worried about anything happening in the world, to me, I would be most worried about the pigs or the southern European nations, which have been the epicenter of a lot of the banking crisis over the last decade. So I look at high yield. I look at U.S. leverage loan indices. I look at dollar yen. I look at other measures of risk and credit spreads. And I don't see any fatigue here at all. In fact, I know it's disturbing to look at the absolute levels of debt, but right here and now, I'm not worried about small caps telling me we've got a debt problem.
So
it's a growth concern in the headline.
So are small caps investable or no? Or do you favor large caps over small caps? Because of what we're seeing.
Well, I tell you what, I think this underperformance on small caps relative to big caps is something that's worth buying. And if anything, I've historically used small caps in the IWM as a hedge against emerging markets, which are flying high right now. They often have traded together and have been highly correlated, and emerging is trading better than the S&P.
So I don't like to think of it as just a monolithic small cap, right? It's made up of,
sectors.
Sectors, and there's value and there's lack of value in some other ones. It's interesting to me, though, because I think of the small caps as having a much more U.S.-centric business, which is where you want to be. Even with emerging markets improving, though, our economy is still the strongest. The other thing is interesting, the fourth quarter, the IWM got hit much harder. I would have thought it would have rebounded harder. When we see illiquid markets and you have sellers into illiquid markets, things just trade terribly. I would have thought the reverse would have happened on the upside when you see markets that are stronger but thin, that you would have had better performance.
Is that a tell then?
I think it might be. I think the relative value is sort of interesting here.
As a catch-up trade, though.
Yes.
Not as a
Ease as a
concern for the
hedge
broader
trade.
markets.
As a hedge trade, long IWM, short spiders, I think is actually
That's exactly what
interesting.
Carter Worth said to us last
Yeah.
night, and he thinks it is a catch-up trade, except for the fact that you think about where is the Russell 2000 is leveraged. 17% of the weight is financials. That was one of the reasons why they got hit so hard in Q4. We know what large cap has done. We know what the regional banks did, and they continue to underperform. The XLF chart actually looks a lot like the IWM, the Russell 2000 chart. It has been stuck in a range, and I just think that is very reflective of just kind of just growth outlook. I mean, that's what I see. I also see the same thing as that the 10-year Treasury yield back at 2.5% is not bullish for growth, in my opinion. It has the potential to add, kind of money back into risk assets that like lower interest rates, but I'm not sure it's bullish for economic growth.
So can you be in that pair trade?
I don't think you can. I don't like that pair trade.
I don't like it either.
Right, because you don't like financials.
Yeah, but I just think that, like, what happened in Q1, correlations went to 1.
Small caps
that's
over
what happens.
financials,
You know what I
would you
mean?
rather?
So-
Sorry, that's what I did.
I will permit this transgression
You really
once.
jumped
Sorry.
ship.
The rest of the show,
Can I tell you
you're
something?
on watch.
That's a really
No,
that's a really
good-
easy
that's
answer.
a-
You want to
is
say it? Because I don't like
Would
when
you
you ask me
rather
questions. Yeah.
small caps or financials?
Much rather financials, and I'll tell you
Really,
why.
much rather.
Finer print later in the show is going to be absolutely amazing,
Oh my
and
God.
I'm not going to give it up. But on valuation, on a relative basis,
Listen to you.
there's just absolutely no comparison, in my opinion.
Dan
I'd rather
likes banks
focus-
here.
Yeah.
Stop the
Great
press.
God, I love hearing that.
Great news.
I do love hearing it. I'll tell you what, and not to jump in front of the financials that she's going to be talking about, but I do think we're going to see some loan growth. I do think we're going to see some trading revenues that weren't there in previous quarters. We had a monster first quarter. So I would think that ought to translate fairly well to some of the financials. And for that reason, but they're specific. I think they're all a little bit different. I think it's great for probably Morgan Stanley. I think it's great for Goldman Sachs. I think it's great for some of those, probably Bank of America. But some of the other names, maybe not so much. So it just depends on what we're defining as financials when we say the whole financial world.
But in terms of technology today, I mean, yesterday we had tech closing at an all-time high, and we had Apple today trying for its longest winning streak since 2010. Didn't quite make it there, but that's supposedly one of the sectors leading us.
Right. Well, tech certainly has been. Semis were weaker today, but if you look at Qs, I thought it was a pretty yeoman-like effort when you consider the run we've had. And in Apple's case, I think Apple is really, it's more indicative of a market that people are looking for defensive mega caps and companies that, frankly, I don't think that Apple is over-owned here. In other words, I put it differently. I think Apple is under-owned. I actually think that if you look at the fundamentals and you look at the valuation, it's easier to play defense with Apple at this stage within 2% of all-time highs.
What are you talking
Like
about? I mean, first of all, this company is expected to have
different shows.
The stock has rallied 40% off the lows. You know, when this company, we started the year with an earnings pre-announcement, the stock was at below $160 or something like that, and the stock went down 7-8% in a clip. Now it's obviously been up 40% since then. Here's the thing, you know, they're expected to have their third annual iPhone unit decline. We're not going to know because they're not going to tell us what the units are, right? They're also going to have the first earnings and sales decline in a number of years. So you tell me what the world, what the globe looks like. You tell me what the trade situation looks like for a company like Apple. They started this 2019 off telling us that China was a problem. We have not heard anything to believe since January 2nd
China was
that
only a
anything's
problem
changed.
because they mispriced the phones, and that hurt their
Well, we'll
unit
see.
sales.
You're
And then
gonna-
they adjusted
They corrected that since then.
Right, and they
Yeah.
corrected that since then, and that's really when you started to see this.
You think
big move
sentiment
to
is
the
bullish
upside.
on Apple at this point?
My goodness. I mean, the stock now is it's
absolutely
almost
not.
back to $1 trillion in market cap.
So?
No.
You don't feel like there's been an analyst drumbeat since they released all those services 10 days ago
I
or
thought we
whatever?
sat here that day saying Apple TV's a
Oh,
dud. There's no
I
services.
agree.
Actually, it's all about
But the
fixing
analyst
screens on
community,
phones.
the analyst
then why
community
is
was
the stock
positive.
high?
Look, because I think people have been defensive and looking for places to hide it and aren't interested in chasing Amazon and the ultra cyclicals. I think Apple at 13 times X cash is very defensible here.
I don't agree
and I think
with the
people reacted on the way down.
I don't think they're going there for the defensive side. I think people have finally bought into the idea, and you've talked about it, I've talked about it forever.
About services.
Services and wearables and
Really?
AI and all the different other areas that Apple is. And as they strip out, and they're not going to be as transparent as everybody would like, but as they come back from that, take a look at where the margins growth is going to come from, right? Those other areas. Where's the real growth coming from? Those other areas. And I think people are finally accepting that, you know what? Maybe there were peak iPhone sales. But if they are growing in the other areas, that really could propel the stock higher.